Okay, we're going to do some real talk about what a seller's market is. What does it mean? What happens in a seller's market? Why is this market different right now? Those are some of the topics that we're going to cover in today's video, so stay tuned. Welcome. My name's Laura Gallant. I'm a full-time realtor here in Colorado Springs, Colorado, and I'm your Colorado Springs realtor. On this channel, I offer real estate tips and knowledge, helping you fall in love with Colorado Springs. So it is a crazy seller's market. I've been tracking it daily on my Real Estate Market in a Minute on my YouTube channel. So feel free to subscribe and check that out if you are planning to buy and sell in this market. But let's talk about what is a seller's market. And just baseline, what it is it's very low inventory. And in our market, it's record low. It's 2 weeks of inventory, historical lows, and a huge demand, which means many more buyers. And why are there many more buyers? Well, we're at historic record low interest rates. And those two pieces have created a very strong seller's market. Now, I'm going to discuss a little bit later why the inventory is so low and what occurred in the past to create the situation that we're in now. I believe that understanding a seller's market will help you as you approach buying in this market. So this video is going to go over some of the concepts that have occurred and some things to understand so that you're better prepared when you approach this market, whether you're buying or selling. So what are some things that happen in a seller's market? Well, it's a great opportunity for investors who have already have properties in this market to pull those properties out. So they're going to sell them. They're going to cash out on the equity build that we've had, and they're going to reinvest in this area. Now, if you are a renter in some of those investment properties, you might be getting a notice that says, I'm planning on selling this. I'm not renewing your lease. You will have to find a new place to live as of the end of the lease. Now, in a more balanced market, that didn't always occur. We typically an investor would maybe sell to a new investor, and that does happen still in our market, but more new first-time home buyers are coming into the market with those record low interest rates. So many of those investors are just saying, let me sell it. Whoever buys it, because I want the highest and best offer I can get for it to pull the most equity out to reinvest elsewhere. And so that could be a first-time home buyer who wants to actually own or occupy the property and move into it. So what that also translates to is more people have to go find another rental. So our vacancy rates in Colorado Springs at the end of the fourth quarter were 4.6% vacancy rate for rentals, which is pretty low, with our national average being 6.5%. So we have a lower vacancy rate, which means that our rental market is very strong. So those investors are happy to pull their cash out, move those into new investment properties and get more renters. It doesn't always mean that there's more rentals depending on what they're purchasing. So that's part of what's happening in a strong seller's market. Now, if you're in a strong seller's market, which pretty much all of the US is, you already know what's going on. We have low inventory, high demand, simple economics. Prices rise. In our market over the last 4 years, we've seen on average of about 10%. I think in the last year of 2020, we actually went up about 13% equity. It depends on who's running the stats. But in general, if you average the last 4 years and 10% equity growth each year, many people have had a huge increase in their value, up to 40%. So there is a strong ability to use that equity, and many are taking some of that money out and investing into real estate investments, which again makes it lower inventory, right? So more people are out there buying up these properties to be able to take advantage of the opportunities that are occurring in the seller's market. If the rate of return in the stock market is 2 to 3% right now, and on real estate you're going to get 6-7%, putting your money into real estate right now is something that's obviously more beneficial to you. So buying up investment properties during this market is going to help you increase your return on your money. Okay, so let's talk about the seller standpoint. It might sound like it's all rosy for the sellers in this market, and honestly, most of it is. They have multiple offers on their homes. They can pick and choose. But in our current market, quite a few of those high offers that they take, if they are choosing only the highest and best offer or the highest offer, they're falling out of contract. So they're coming back on the market. We had 139 homes come back on the market in January, which meant that 139 contracts for single family residents, they either wrote that appraisal gap that we spoke of in my previous video when I talk about strategies for buying in a seller's market, but they're falling out because they don't want to overpay for their property, and sellers are looking at the numbers, and it's hard. There's 20 offers on your house. I mean, it's a little stressful, right? And you're trying to achieve something for your family, but at the same time, you've got to move. Now, if you're an investor, you're not that well invested, but if it's an owner-occupied property, it's tough in a seller's market for the seller also. Yes, they have to sell, but if it's an owner-occupied property and you have to buy another property, it's a little stressful because now you've got to get out there and you've got to find a house and you're in the buyer's side. So even though it's a seller's market, and yes, they have the driver's seat, unless it's investment property and they're trying to reinvest, if it's an owner-occupied situation, it can be challenging because you've got to find something. And we talked about this in the strategies. You can't put a contingent offer in a multiple offer situation. So sometimes it might be better for you to simply pull the equity out in an equity line of credit, use that to buy a second property if you can qualify for 2 loans, and then sell your property and be done with it. Know that your purchase has already happened. And that can work for some people, but not all people financially. But it's tough for the sellers in this market too. Yeah, they make more money, so yeah, they're gonna be in a better situation. But that's part of what's going on in the seller's market. Now let's talk about the buyer's perspective. So it's tough, right? They're up against multiple offers. They're trying to figure out the best strategy. They only have so much money, right? You have you have a finite amount of funds that you qualify for. So when you're searching for a house, you're actually looking below your max price because you know you're gonna have to offer above asking. It just becomes a little bit dicier, but it can happen. But it puts a lot of stress on a buyer because it's likely, depending on the situation, that they're going to write at least 1, 2, or more offers till they get under contract on a house. So it's pretty stressful for the buyers. They've got only so many opportunities within their financial means. So it's tough for the buyers in this market. Now let's talk about appraisers. I'll be honest with you, I wouldn't want to be an appraiser in this market. Now, they do have to go and evaluate a property in 3 different ways. They have the cost evaluation, they have the comparative sale evaluation, and they have one more, income capital evaluation. But I'd like to say that they also have to look at the multiple offer. And it's tough because if you're an appraiser and 20 people made an offer on this house and they're willing to pay a certain amount. Now there's only so much that they can do because they have to balance those 3 cost evaluations in their appraisal evaluation for depending on if it's a government loan or not. But they have to look at how many people were willing to pay that much for the house. So as an appraiser, it's tough. Now, like I said in my strategies video, I indicated that I have, in the last 5 transactions that I've put an appraisal gap on, and we had a $15,000 difference between ask price to offer price. And my buyers were willing to pay a certain amount over the appraised value, not necessarily the total 15, but all appraisals came in at value. Thank goodness. But as an appraiser, it gets tough. Now, we just missed out on one of my clients on a house that went 50,200 over asking. It was 450,000 and it went for 500,000 or $500,200. And I'm not sure it would appraise. I didn't find comps for that. So as an appraiser, they're struggling in this market too. They're trying to do their best. The market is moving, and people talk about bubbles and that, but really it's not a bubble. It's just the situation and what happens. So it'd be tough to be an appraiser in a seller's market right now for sure. So what happened? Why did we get to such record low inventory? I mean, last year we thought was record low. Well, we got to go way back into about 2007 to 2009 when we had the huge, crash, right? We had loans that were not done well, lots of properties. We did have an absolute bubble, and the secondary market took a hit, and many people walked from their homes. But when that happened, we had developers or builders who weren't building already at that point as fast as they needed to fulfill the need of the buyers coming into the market. So we come into 2009, everything crashes. That means building stopped. People weren't buying, right? They were walking out of their houses. They lost tradesmen because they had to go to work somewhere else to feed their family and pay their bills. So developers were not able to even build homes for a little while, and they were recovering financially. So they had houses that were pre-built that never made it all the way to the closing table. So we went through a recovery period, right? So 2009 to 2013, we're still trying to recover. We were already behind on building homes in 2007 to 2009. So you imagine that we're in another 4-year period of trying to recover, and developers and builders are struggling to find tradesmen. There weren't enough houses being built to keep up with the demand of growth. That's people having babies, people moving into our area. Any city is trying to attract businesses there. So that means people will come. In Colorado Springs, we have military presence. So we have lots of military people coming in. And so in 2020 and 2021, we began to see the effects of that low inventory back there and not being able to keep up. Life kept going, right? Life kept going, but there's not enough tradesmen. There might be developers, but right now in 2021, the builders don't have enough land. And now in the economy that we're sitting in, building materials cost more money. So the prices of new homes are going up. Many people who can't find something on the existing home market are turning to new builds, but even in our market, there's not enough land, and the extension of building a home is now 9 months potentially. So that's part of where we see the low inventory. Topple that with a pandemic, and then you add in their super low interest rates, which makes the buyer pool increase, and it becomes a storm for an extremely historic seller's market. So what's the good news? Well, lots of people have seen increases in their property values, right? But along with that, they get some increases in their property taxes, but it all goes to support the community that you live in. So keep that perspective. More kids coming into your communities, more people moving in, more amenities for you. So that just goes without saying. It helps keep the structure of the city that you're in. Another great thing about this market and the super low interest rates is if you're planning on staying in your house and you've been in it and you have a mortgage on it and you haven't touched it and refinanced it for 5 years or so, you could potentially refinance that house to an extremely low 15-year or 10-year term and get a super low interest rate, be able to pay it off faster for less money, and be closer to having it paid off before retirement. So the market offers that opportunity right now with the values being there. So if you've been in your house a while, consider looking at refinancing it, bringing that that payment down, and it could be down or similar to your current 30-year mortgage, but the lower interest rates means you can pay it off much quicker, less interest paid, you pay less for the house, and you'll be free and clear of that mortgage before retirement. So that's a great positive of this market. A seller's market has challenges. It's just part of real estate, though. It's not a negative, it's just what it is. A strong seller's market that we're sitting in now really requires the support and assistance of a real estate professional, whether you're buying or you're selling. So as a buyer, obviously the strategies, the knowledge of the market, the reputation of that realtor in the market, the ability to write a clean, clear, concise contract that is something that you're able to execute on so that you will get to the closing table and close on that house is really important. If you are a seller, you want to have a real estate professional helping you sort through the multiple offers and really fully understanding the contract and the offers that are being made. It's just a really sticky place to be without a real estate professional helping you. So I hope this helps. If you want to know more about real estate strategies on making offers in a seller's market, please watch the video. I'll link below. If you found value in this video, please consider liking and subscribing to my channel. I talk about real estate tips and this beautiful market of Colorado Springs, and my goal is to help you fall in love with Colorado Springs. Thanks for watching. Hope you're having a wonderful day.